you. Tony Drake is with us, CFP, Drake & Associates. Thanks for being with us. Your thoughts here as we're waiting on the Fed on March 22nd. What do you think they should do or not do?
Opinion doesn't hold what Steve Forbes does, but you and I have been talking for months. This is overdone. Think about it, Nicole. If you're in a cold part of the country, you cranked up that thermostat too high to 90 degrees. You come home, decide it's too hot, drop it to 70. It takes time. It doesn't go from 90 to 70. That's what we're going to see with this market. They were so late to the game. I think they're really going to overdo it here. Chances of this so-called, soft landing, I think, is probably past us, right? So their job is to raise it till something breaks, and we certainly had a few things breaking this last week.
So now what? Is there opportunity that could be coming out of some volatility that we're seeing? What are you watching?
Yeah, there's been some great names that you could have gotten in and out of quickly in the banking sector. I think some got, some got thrown out with the bathwater there, and there was some really big bounces as some of that panic and that emotional selling took place. But I think it really depends on what the Feds do here. I think we're likely going to see zero, but they have to be feeling pressure to do 25 basis points just for their credibility. Although I think any more rises at this point would be a policy error. A pause is certainly what the markets need. It's what's needed for stability, but it's tough. I mean, they're commingling two very different issues. The stability of the banking sector and monetary policy can't continue to mix those. You really have to try to separate them.
Right, understood. And for the retirees, you talk about people who can get in and get out, and the traders here do it all the time, and it can work really well. But for retirees, they really need to preserve that principle. People are still looking to treasuries. What are you telling those folks?
As you know, Nicole, we work with retirees. That's the main core of our business, and they're nervous. Whether, people are calling in, they're asking for advice. Should I have retired? Can I stay retired in this economy? For those retirees, sequence of return risk is a real thing to contend with. Losing money early in retirement has a big impact in the longevity of their portfolios, but it really boils down to time horizon. And if they've planned, accordingly, they have a bucket of safe money for income. Great area might be some of those short-term treasuries. Then they don't have to worry about this instability of the market if you've shored up your income for 5 or 10 years. So having that plan where you think about that's important. Another great thing to think about right now is tax strategies. If your IRA is down in retirement and you don't have a lot of other income otherwise, a Roth conversion might be a great time to take advantage of this. If it's down, you're going to pay a tax bill on a smaller account. When it rebounds, it'll rebound income tax-free. We know tax rates are going up in January 26, so this could be a great opportunity to take advantage of these lower rates and potentially your smaller IRA balance.
Yeah, so something like a Roth conversion, and that would be you pay the taxes now and you're sort of tax-free afterwards. In the meantime, do you have certain sectors that you like more than others? I mean, we have what's been going on in banks, but we've spoken about so many different kinds of stocks and companies. What do you like and look for versus those that you might stay away from?
Yeah, we still really like some of the international markets. We're keeping that exposure smaller. Of course, it can be volatile. But I also really like some of these plays that are going to benefit from the infrastructure spending that's yet to come this year. I think with all the news in the media about, all the volatility we've experienced, and certainly all the bank stuff, interest rate hikes, not a whole lot of attention has been kind of looked in that direction. So those could provide some great opportunities. You have to be careful. There's some names in there that are going to get a little bit beat up with high interest rates. So you got to choose them wisely, but there might be some great sectors there with some opportunity in the volatility we're experiencing.
Interesting, Tony, to have you on today, especially when you say, Fed, that's enough. You're another one in the that's enough category. Tony Drake, CFP, Drake & Associates, thank you very much for being here. Appreciate it.